Good morning and welcome to GrainTV. Today is February 7th, 2012. I'm Logan Burgess. To my right is Brock Shimano. Brock, kind of a quiet overnight trade in Chicago, it looked like. Trade's kind of range-bound, moving toward Thursday's USDA report. Can you take us through what the trade's expecting to come out on Thursday morning?
What we're looking at here is the average of the analyst estimates for the ending stocks revisions by the USDA. Corn looks like it's going to be revised lower by about 55 million bushels, beans by 2 million bushels, and wheat by 3 million bushels. Corn looks like it could be a big mover. Beans and wheat domestically doesn't look like we're going to get a whole lot of changes, but I think internationally we do have to anticipate a reduction in the wheat out of the Black Sea region and corn and soybeans out of South America as we move into this report.
Yeah, Brock, it looks like kind of the ending stocks figure shouldn't be revised too much here in the report coming out on Thursday. One thing that does affect that ending stocks and kind of the demand side of that equation moving forward is going to be the Chinese demand in the market. Later in February, the Vice President of China is going to be visiting the U.S. He's actually going to Iowa, and there's a lot of expectations of him signing trade deals here for export sales, specifically for soybeans moving forward. Year over year, we're well behind where we were in 2010 when looking back at 2011. So that certainly should be supportive of lagging export soybean sales that we've seen as of late.
Something that's going to support corn prices are several different factors that are going to actually help us achieve that ending stocks reduction. I think things that we didn't really factor in the January report was December corn usage for ethanol. We ran well ahead of pace for December, and even after the tax credit expired on January 1st, we have been still running at a pretty hot pace as far as corn usage for ethanol. Recent increases in export pace as well for corn in particular. I don't think that was factored in the January report. We should see some revisions higher on exports on this next report. And then again, the South American weather issue. It's been a constant in the marketplace for about the last month or so. We've seen dry, hot weather there for about a month or so. We are seeing a little bit of a pullback in that weather, helping get some rains and that sort of thing into the production.
Right.
But what kind of damage has been done, we have to keep track of that as we move forward.
Right, certainly. Well, we'll keep you posted. Follow us on Twitter as we move toward that Thursday report. We'll keep you posted on all these events leading toward that report. We're going to take a quick commercial break, but we'll be right back to watch the market trade live in Chicago.
Welcome back to GrainTV. Let's go to the FireTip trading software to check out the live quotes in Chicago. As you can see, corn's down 3 3/4, soybeans down 2 3/4, Chicago wheat down 8.5, and Kansas City wheat down 6.5. The dollar index is also down pretty sharply this morning, down below that 79 level. Well, Logan, on Thursday we have some fundamental news coming out from the USDA. As we head towards that report, what are we looking like technically on corn and soybeans?
Yeah, Brock, well, we pulled up a chart here on the FireTip platform. If you're a producer at home, you like charting, you like the live quotes, give us a call today. We'll set you up with a demo. Here's a March corn contract. As you can see, today we're trading around 640 3/4. We pretty much made up all the ground that we lost there on that January 12th report. One thing to note on here from a technical standpoint, we did add the 100-day moving average. This is the blue line. And you can see that 4 or 5 trade sessions ago, we actually traded through that 100-day moving average. We haven't been back above that 100-day moving average until all the way back in September, as far back as we have to go. So, that should lend some support to the downside. Kind of the same story here, moving over to March soybeans. 2 or 3 trade sessions ago, we traded above the 100-day moving average on that. So technical traders are certainly watching that level. It should add some bids in there in the days moving forward here as we move down toward that 100-day moving average. One final thing to note here, we actually looked at the dollar index a little bit. We saw this morning that Fitch and Citigroup actually raised the likelihood that Greece would leave the EU. It's kind of surprising we're not seeing a little bit of a higher trade in the dollar index as a result of that today.
Yeah, we know that the euro currency is a large part of that dollar index.
Right.
So if their currency is weakening due to Greece bailouts or fallout of the EU, we should see the dollar index rise. We're not seeing that today, and Although we have been gaining support around that 79 level, so it's going to be interesting to pay attention to the close. If we close below that 79 level, this could be confirmation we might move a little bit lower.
Yeah, certainly. Well, we'll keep you posted on the dollar index, corn and soybeans on our Twitter. Follow us on Twitter for live market updates as the markets trade. I think that wraps up our show today for Tuesday. Have a great rest of your day.